Welcome back to the Todd Vino Show. I'm Dan Alstrand along with you here on a Tuesday morning. If you were following the news yesterday, you heard from Ottawa that Finance Minister Chrystia Freeland says the government is making some changes to mortgage rules to help more Canadians purchase their very first home. This article on our website, halifax.citynews.ca. She says changes will come in force in December and better reflect the housing market. The price cap for insured mortgages to be boosted for the first time since 2012, moving to $1.5 million from $1 million to allow more people to qualify for a mortgage with less than 20% down. The government will also expand its 30-year mortgage amortization to include first-time home buyers buying any type of home, as well as anybody buying a newly built home. On August 1st, eligibility for the 30-year amortization was changed to include first-time home buyers buying a newly built home. That's the big change. And as I mentioned before the break, when it comes to mortgages, there's really only one set of numbers I dial, and that's for Team Clinton and Clinton Wilkins. Team, how are you?
Thanks for having me, Dan. How's your day going?
Well, so far so good. Tell me a little bit about this. How big a deal is changing these rules to allow first-time home buyers buying any type of home?
Well, let me tell you, it was a busy day yesterday, very exciting in our industry and, very exciting for our clients as well. I think so many first-time home buyers, Dan, are really having a hard time, breaking into the real estate market. And this is really showing the commitment from the federal government to support young people. And as we know, housing and someone's home often is the biggest purchase of their life, and it's their biggest asset. And typically, homeowners are able to build wealth faster than those that are renting. So this will enable more first-time home buyers to get into the market. And, there's going to be a lot of new construction happening, across our country. The federal government is trying to get a lot of new home starts going. And, I think it's going to be positive for first-time home buyers. And I think it's going to be positive for people that have owned a home in the past and are looking to buy a new home. They will have 30 years to pay their mortgage back. I think there can be some people that would argue to say, we're going the other direction now and making it easier for people to get into homes. But I think that's really the message that the federal government is sending here.
How big a difference does it make, Clinton? From increasing the amortization cap from, say, like 25 to 30 years? How big of an impact monthly does that have? I guess it's based on the size of the mortgage.
It would be based on, exactly. It would be based on the amount that the borrower is going to borrow. But it does make a big difference in terms of qualification. We need to remember that we are still qualifying everyone with a stress test, which means that we're qualifying them right now on 2% above their contract rate. So having a longer amortization will enable a borrower to buy a more expensive home. And really, it may just enable them to get into the market at all. And I think that's really what's the most important thing that we need to remember. Yes, they have increased the maximum cap from $1 million to $1.5 million. I don't know if that's really going to move the needle here in Halifax and Nova Scotia, but it certainly is needed in other areas like Ontario and BC. There are very few high ratio insured mortgages being done in those marketplaces compared to us here locally. Many first-time home buyers are putting down that minimum down payment, which is 5% on the first $500,000 and 10% above that $500,000 mark. So I do think it's going to move the needle. Right now, the average house price in Halifax is around $570,000.
That's incredible.
And that means that a household before this change needed to make in excess of about $125,000 to be able to just break into buying an average home. Now with the amortizations going up to 30 years, it will enable more borrowers to break into the market even at that average price point, which I think is very, very good. Now, these changes, Dan, are not coming into effect until December 15th. Mm-hmm. So I think it's a good time to get excited. It's a good time to get pre-approved and figure out, what you can afford. And do you need to wait to be able to get a 30-year amortization, or does it work now? So I'll tell you kind of where my concern does lie. And we've talked about this before on our show with Mortgage 101.
Yep.
Typically, as the rates go down, there's going to be more competition in the market. I do think that there's a lot of borrowers sitting on the sidelines waiting for rates to go down. And I think the more competition that there is, we've limited inventory in our marketplace. It's going to start driving the prices up again.
Clinton, is there any restrictions on this new program? And the reason why I'm asking that is, let's just say that there's somebody out here listening to us today or listening to Mortgage 101 on the weekends or online that is, say, in their early 50s and has never owned a home before. Will you take a mortgage out on somebody that of that age at 30 years? They'll be like 83 before they'll pay it off.
There's no age restriction, so someone at any age can buy a home. I can tell you we've had retirees buy homes and take 25 and 30-year amortizations. The bank has no limitation on that, so that's not a problem at all. Mm-hmm. And I think it's almost the contrary. I think there's a lot of people going into retirement age that are leveraging their homes or buying homes and taking out a mortgage. Right now, oftentimes taking the mortgage is less expensive than renting. So, if we're looking at it that way, it's really just about cash flow. So there's no restrictions. There are a couple interesting caveats that the federal government does place on what a first-time home buyer is. So our listeners might be interested to know this. Sure. So if anyone's gone through a separation or a divorce and they've owned a house in the past, as long as they had paid back their home buyer's incentive, their RRSP withdrawal, if they participate in that program, they would be considered a first-time home buyer again. So there are some interesting caveats as well to the program. And a first-time home buyer could buy a new construction or a resale home. So I think that's an important change that we certainly want to highlight.
I caught Mortgage 101 on the weekend, Clinton, and great information in there, as always. But that being said, this time of the year is with the mortgage rate starting to fall. Is this a good time, or should we wait until we see what the Bank of Canada is going to do in its next update?
Well, I think that's really interesting. We're almost at the end of the fiscal year for the bank, so I think that's something interesting to take into account. We do have an encore presentation of Mortgage 101 here this weekend, so if anybody missed it last weekend, they can certainly tune in.
Saturday at 11.
Saturday and Sunday, that's right. So based on the fiscal year being October 31st, many lenders, I'll say, and I'm going to use this as an air quote. I know no one can see me air quoting, but I think some mortgages are on sale. So if you're looking to do a transaction and you can fund it quickly, i.e. in 30 days or before the end of October, there's some very aggressive pricing that's available from several lenders right now. So I think it's an interesting time to do business. It's kind of like, you think about going back to school and maybe it's a good time to get a cell phone, or maybe that's at Boxing Day. Right now is the prime time, I think, to get mortgage lending, especially prior to October 31st. I think the rates are going to continue to go down, but there certainly are some great specials available right now.
The time is right when it's right. I mean, that's hard to sort of describe, but it's based on individuals and their current situation, isn't it? Like, you're not going to say, well, wait till February 12th of 2025 because that's the perfect time to buy.
It's impossible. No. And, people are doing mortgages all the time and at any rates. So, even if we're looking back over the last 12 and 24 months, the rates did peak in somewhere almost in that 7% range. We were still doing transactions every day then, because we need to remember people are buying and selling homes, their mortgages up for renewal, and they need to refinance. So transactions are happening all the time, and the right time for someone is the right time for them. Right now, if there is an opportunity to do a transaction, yes, I'm saying that there's some good pricing available, but not everyone, it might not be the right time. So, but if it is, I would certainly encourage everyone to reach out to an unbiased mortgage professional. The best advice comes from a mortgage broker.
Clinton, we only have about a minute or so left. How's the market looking right now with these changes? Is it starting to heat up? Are we seeing people buying now?
We're certainly seeing more transactions. I did read some stats that came out of Nova Scotia Association of Realtors saying that there's certainly more sales that happened in August, but there's also more listings. So I think it's becoming more of a balanced market out there. I can tell you from the transactions that we participated in, and obviously doing the financing, I think that buyers and sellers are becoming a little bit more negotiable. They're meeting somewhere in the middle. We're not seeing these situations where there's 20 offers on a property like we were in those COVID times. The busiest market, though, Dan, is this sub 500,000, which really tells me that the first-time home buyers are the most active right now. And I can tell you from our practice, we certainly have a lot of first-time home buyers pre-approved. And the biggest challenge that I hear from these guys is there's very limited listings kind of under that $500,000 price point. So that is the most active. Typically the higher priced properties, so like 600,000 plus, those ones seem to be sitting on the market for a longer period of time.
Clinton, is always a pleasure.
Thanks for having me, Dan. Have a great day.
Mortgage 101 on Saturday and Sunday. Encore presentation this weekend, 11 o'clock right here on 95.7. As always, Clinton, a pleasure, sir. Have a good one. We're going to stop down and take another break. When we come back, the show will continue. We'll be talking about the Air Canada strike and the aversion of the Air Canada strike and what it means to small business. Dan Kelly from CFIB will be your guest. You're listening to The Todd Vino Show. I'm Dan Alstrand. We're back in minutes.